Hey, what's up? This is Brian Kuzmar from beautiful Lauderdale by the Sea, Florida, and don't have our normal pier cam up here at the Windjammer Hotel and Resort. They guess they're down for the day, so I'm using the camera that is actually, hang on, you see my hand right here? I'm right down in this area, right over here. This is called Hillsborough Inlet, and most of you locals are familiar with Hillsborough Inlet. It's where most of the boats go out of to get offshore, including me when I go out fishing. I zip right past this jetty here and out there, and honestly, for the last 2 months, I haven't caught much fish at all. So I've been going for some nice boat rides, though. Anyways, beautiful cam here. I think because the sun is shining into it, we're not getting the colors that you normally would get here, but the water is typically either really green and nasty or beautiful blue. Anyways, let's move on to what's happening. We're keeping the pace with gold and silver and platinum today. I like the numbers I'm looking at. I was really shocked with the update the way it was. I was thinking maybe a pullback, and we're going to have pullbacks. It's going to happen, and as I always said, buy the dips. Just like they did in the stock market before it got to this ungodly level. You bought the dips and you made money. Same thing with precious metals. We're not even close to a bubble, not even close. In fact, we're just starting, even though we've been in a bull market for quite some time, we're just starting to see that acceleration of this bull market because of politics and because of economics. But today, keeping the pace with precious metals, and we'll get to that in a minute, let's take a look at, and I haven't looked at stocks and bonds and this kind of stuff in quite some time. And the reason I haven't, because it really doesn't have a big effect on us here. And let me see if I can find, where the heck did that go? I just lost it here. And nope, there it is right there. Stocks and bonds, equities. Looks like the Dow Jones is kind of, and the only reason I'm bringing up the Dow is just because of how heavy it got hammered yesterday. And the S&P and everything across the board looked like it got hammered. But it looks like it's kind of holding steady right here. But really not much of an effect on precious metals. There is no couple. Well, I guess you could say if everyone started to flee stocks and bonds, people are going to start putting their money in gold, silver, and platinum. So there is kind of a relationship here. I think if we get to the point where we start seeing big drops in equities, the Dow Jones and the S&P and NASDAQ, people will take their money and try to look for safety. And for 5,000 years, gold and silver and platinum has been a safe place to be. So we'll see some of that money coming in when you start to see this market really get hammered. But I don't think we're there yet. With all the stimulus and everything like this, I think that you can never underestimate the people that have the printing press. And I think they can still kind of keep this market alive by just throwing cheap, easy, and plentiful money at it. And this money is cheap and plentiful and looking for a place to go, any kind of return. I know people that have millions of dollars and are happy to get 1% in an account. It's like 1% doesn't even cover the cost of living, folks. But of course, that's why the stock market looks so appealing and why all that money floods there, and looking for a place to go. Same reason Bitcoin has seen so much money flood into it there, which is not an awful lot in the grand scope, scheme of things. Bitcoin is probably like 1% of 1% of the entire equities market, and a small part of the gold market as well. So it's a very small market, but money, looking for places and returns. So when you get so much money flooding into a market, of course the market's going to go up. But is it going up because because it deserves to, because it's got profits and earnings and it returns something, or you get something back, or is it just going up because so much money is thrown at it? I think what we're seeing is for years and years, just so much money has been thrown at it. That's why a lot of these things are gone up, not because of fundamentals per se. So let's move along here, and of course you see what I've got here is a bunch of different countries' currencies. Well, I'm always talking about the dollar, and what do I use? Why am I talking about the dollar? Because I'm always calling it the fiat dollar. It's backed by nothing. However, I always forget to mention that every other country is fiat. There's no other country in the entire globe that is not fiat. None of the countries are backed by gold and silver anymore. Haven't been for years and years and years. And I guess, even though I diss the dollar quite often for being a fiat dollar or fiat currency, we are still loads way better than other fiats out there. In fact, the way you got to look at it is the dollar is the winner only because it'll be the last horse in a horse race to the glue factory, the dollar will be the last horse there. So that it's kind of like the winner, I guess. And the destruction of fiat currencies, it's likely that the dollar will be the last one to dissolve or get reset or whatever that may be. It'll be a global reset when it happens, folks. And I'm not using reset in the term that you've heard it recently in the news. I'm just talking about when fiats kind of become almost worthless. And that's not really a hyperinflationary moment as much as it is a currency deflation moment. Let's take a look. Speaking of fiat currency, let's take at the dollar index today. And I promise you we'll get to the precious metals report here shortly. Dollar index still below 90, and you take a look here and you can see I got the one-day chart there. Overall trend for the dollar. Like see my little cursor right here, if I was to take this cursor and I was going to make this chart out to, I don't know, 10 years, 20 years, 100 years, it would look like this. Just a downward trend eventually. I guess it would stop at some point and be revalued, but who knows. Good article by Peter Schiff, by the way. I'm a big Peter Schiff fan, always have been. Donated to his campaign, I think, when he ran as a, oh man, what was he running for? It's been so long now. But I believe he was running in the state of Delaware for a particular office, Senate or something like that. But like Peter Schiff, I'm on the same mental wavelength he is for the most part when it comes to the Fed, gold, silver, economics, the Keynesian economics that we're experiencing. Anyway, let me get on to Peter Schiff's little article here. You can find us, Peter Schiff, Are Global Financial Markets Beginning to Decouple? And I'm probably one of the few gold guys out here. I'm not afraid to send you to other people's sites that sell gold and silver and platinum. You know why? Because I only sell physical. I don't hold it for you. And on top of that, I can beat any of these guys' prices. So, and again, so I'm not afraid to show you competitors, when they say something. And Pete, I can't even consider myself a competitor with this man, but again, I'm not afraid to show you other places, and he's a gold seller out there as well. Peter Schiff's Gold News, subscribe here. And actually, if I don't know about his newsletter, as long as he's not trying to sell himself, which I'm sure he is, but he's got a lot of good nuggets. But you can get everything for free on his site here, so you can read his articles for free. And again, I like Peter's articles, and I like it watching him on television when he does interviews and such too. I think he's spot on for the most part. Again, let me move into this. The first day of trading in 2021 was, Peter Schiff put it, atypical. In his first podcast, Peter analyzed an unusual day on Wall Street, which basically is what we were just talking about, where it got the crap kicked out of it yesterday. The major indexes opened up and closed sharply down on the day. The Dow Jones set a new record before falling 382 points. The S&P 500 set a record, then dropped 1.5%. Though it didn't set a record with the follow other indexes, closing down 189 points. So it was down a little bit. Meanwhile, the dollar continued to show weakness against the euro. And particularly the Chinese yuan. And this is where it gets interesting here. Peter says, this has happened occasionally, but it's very rare to see this big a move in a particular pair. You're most likely to see the dollar move 1% against the euro of the Aussie dollar than you will see against the Chinese yuan. But to see it happening on the first day trading of the year, like yesterday, the dollar kind of got hammered compared to the yuan. I looked back for 30 years and I couldn't find a single day first trading where you saw this big of a move at the beginning of the year. So he's picked up an interesting pattern here. Not a pattern, but he knows the pattern of what happens in the New Year's, and he recognized that, wow, this is very unusual. And again, Peter's a very smart guy. But what he goes into here, he doesn't think this is an insignificant move. He thinks it's a sign of something bigger happening. And I believe he's right. The U.S. has ratcheted up its economic war with China in recent months. It goes beyond the trade war. For instance, the New York Stock Exchange recently delisted 3 Chinese companies. So what Peter's saying is U.S. In this current administration has been kind of at war with China about a lot of different things. Not a war per se, but we have been at an economic war, and some might even say a viral war. But I would say even if it was a viral war, it has everything to do with an economic war. This has all got to do with economics. And this administration, current administration's policy has been really tough on China. And I think a lot of it deservedly as well. So anyway, let's go into this. The U.S. government, for example, I think this administration just recently made it illegal to invest in some Chinese companies now, which really took the wind out of some of their sales here. And he says, I don't think it's coincidence that we're clamping down on China and the dollar is getting clobbered against the yuan. China is obviously going to retaliate. Even though I don't believe this hurts China, they don't like it. They don't like it in principle. The U.S. government's saying that Americans can't invest in Chinese companies, can't own stock in Chinese companies. So I think the Chinese need to save face and they need to retaliate, and that's kind of what's happening right here with the U.S. dollar getting hammered against the yuan. They are still America's biggest creditor. They own more U.S. government debt, U.S. agency debt than anyone else in the world. So China owns a huge amount of our debt. Can they use this as a weapon? I'm sure they can. And thus far, they have been gradually paring back their positions. They can certainly increase the pace at which they're doing that, which really is going to hurt the dollar. In fact, with the stock market dropping sharply, there was no safe haven rally in the bond market. Yields on 10 and 30-year treasuries actually went up. So no flight to safety in U.S. Treasuries yesterday. And where did this money go? Gold and silver. And that's what we saw yesterday. So Peter, very observant on this and nails it. I think that's exactly why we've seen this big up day that we saw yesterday on precious metals. And he goes on to say down here, this is the inflation trade. It's not just about playing out in industrial metals, playing out in commodities. And I took a look, and he's absolutely right. For instance, soybeans are above $13 a bushel. What does this mean? This is everything that we have been talking about for 7 months, about inflation of commodities. Is really all about the deflation of the dollar. As soon as, what is it, good money, Gresham's law, good money drives out bad money. Where is it? Yeah, I always forget which way it goes. But what's happening is that people don't want to own U.S. dollars, and that's going to happen on a global level. So these dollars are going to look for places to be traded for something of real value. So I think what we're going to see is we're going to see commodities markets get really heated up. Besides gold, silver, and precious metals, you'll probably see oil. Once the dollar really starts tumbling and all the other world currencies start tumbling with it, because we're going to take everyone down with us for sure, then all bets are off. People are going to just spend their money and buy anything they can, just to not sit and hold on to a dollar. And you kind of got that right now. That's where there's all this cheap money, what we talked about earlier, cheap money looking for returns. And that's all the result of a fiat currency. Hey, I love this graph right here. I wanted to show it to you. Remember, I've been talking about for quite some time, I've never had a graph that was inverted yet, how gold and the dollar chart is, if you inverted the gold chart, it fit directly into the dollar chart almost for the most part. Well, here is the same thing, except someone inverted the dollar chart. So basically, this dollar is going in the opposite direction. What they did is they flipped that dollar chart upside down to kind of compare it to what gold and silver's, or particularly gold's doing. And take a look here. It's exactly what I said. You could fit the two almost like a puzzle. There's some divergence here, which we expect. But take a look at the overall trend of the dollar. I didn't need a graph to show me this. I've been kind of watching it in my head for some times. Like I said, I'm really good at spotting patterns, big patterns, not small ones. This is exactly what I've noticed for some time. So love this chart. It shows exactly what we've been talking about for months now, the direct relationship between the dollar and gold. And the inverse direct, if you flip the chart upside down, they'd almost look like they were in tandem. And here you go. Great chart. The source on this is the market ear on Zero Hedge. Love Zero Hedge, by the way. I recommend that you put it in as part of your reading. They do have a premium service that you can pay $1 a day for. Gets rid of all those annoying ads. But if not, you can view Zero Hedge for free. Just go to ZH. Here's the site right here, Zero Hedge. But anyway, like the chart here, new U.S. net dollar positioning. As you can see, they're going down. There's the inverted chart. Gold specs position. Looks like it's on the up move again. Anyways, I won't go. You can read that article yourself. And what's the name of it? U.S. dollar shorts getting even shorter. Well, anyway, just type that in. Read the rest for yourself. And again, this all comes down to fiat currencies, a human invention, and we all know humans ain't perfect. And anything that we make, what we did not make is we did not make gold, silver, and platinum, as I've been saying for quite some time. That's made by stars. It's made by colliding stars, neutron stars, or whatever the heck they are, exploding. It takes a huge amount of energy. It's very finite. Man cannot create it. So gold and silver are not man's creations. our marketing and our price discovery is. However, we're starting to find out that the price discovery is based on paper, not based on the real stuff. So we're going to have another awakening at some point where paper, gold, and silver prices diverge. Because really, gold, GLD, SLV, any kind of paper, gold or silver that you own electronically or you own through an account through someone else, you don't really own it. That's like fiat currency. You got a piece of paper in your hand. That's it. And most of this stuff is not backed by anything. So the beauty of gold, silver, and platinum, it's been around for 5,000 years. You can hold it in your hands. That's, we've been talking about third-party risk, so I don't recommend you having anyone else hold it. That's the beauty of this. But anyway, fiat currencies and bitcoins. That's what I talk about Bitcoin also. Bitcoin is a fiat. What is it really? It's not, you can't hold anything in your hand. Anyways, talk about Bitcoin. JP Morgan. The Bitcoin community has been on fire. They were on fire and so excited when they realized that JP Morgan and all these big financial companies were going to come into the Bitcoin market. They felt like it would make them legit. They didn't realize who they were inviting into their house. They were inviting in the giant whales who are going to swallow all the small crypto fish, in my opinion. At some point, they will. And there's a bunch of smart players and a bunch of people making good money, and I encourage you to do that. That's what capitalism is all about. But don't be mistaken. These huge whales that are in the crypto markets, they are in the gold and silver markets, and I've seen for years and years and years what they can do. And that's when, when we talk about monkey hammering, when we talk about manipulation, when we talk about, and this is gold and silver and platinum are highly regulated markets, supposedly, and they still do this stuff. Can you imagine what JP Morgan and these companies are going to do in the Bitcoin and in the crypto community that is unregulated? My God, it's like the wild, wild west for them. They can go out there and be the big bad dude, and nobody actually really even has to know it. They can do it in secret and just knock everybody out. And at some point, listen, they're all about making themselves money. They're not about making the small crypto fish money. They're about making their large asses even more money. And you just get in the way. Actually, you're not even in the way. You are how they will make more money. So they look at you as nothing but more money in their pockets. And that's my opinion as far as that goes. And let's move on to gold and silver prices. I'm going to do a quick update here. And again, sorry about the lateness of this report. I've gotten a couple late starts here. I've been pretty busy in the morning. We are busy as hell at the store. By the way, this company, CCE, another great company that mostly deals in numismatics, but they have a great bullion area on their site as well that shows prices that I'm showing you on a daily basis. So lots of creds to CCE here. And let's take a look. Markets about 1944. The high was 1952, and 1934 was a low. So we're holding on to these gains that we made yesterday. In silver, wow, we're doing really well. Take a look at this 27 to 27.54, kind of hanging in that range. And platinum hanging on to that 1100 range. I like that. It's like a $100 tick up in the last couple of weeks, and it looks, again, they all look like they're holding. However, don't be mistaken. You'll see these markets come down. And very possible to get monkey hammered again at some point, but it's only temporary. When you do see gold, silver, platinum come down in price, if you've got extra money and you plan on buying some more, buy the dips. And again, that's been my suggestion. As far as guessing, I was pretty good at taking guesses and knowing what the market was going to do the next day, but I'm going to be a little more vague than I used to be. I think we're going to trade in this. You see this 1930 range right here to 1950 range. I think we might see that for the rest of the week here. However, I do like this incremental strength that I'm seeing as well. Up a couple bucks a week, or up $10 a week, or $20 a week in gold. Steady climbs. These 45-degree angles are almost straight rockets, takeoffs, from 0 to 60 in like 3 seconds scare me. So, and they should scare you as well. Again, when you see that happen, don't rush down. Oh, I got to buy gold and silver right now. Wait for it to back off a little bit. That's my opinion. We're not in that bubble territory where it's going to just keep going up, 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 up. And when we get in that territory, I'll let you know, in my opinion. Anyways, this is Brian Kuzmar with Commercial Rare Coins. I just said anyways again. I'm trying to get that out of my vocabulary. I'm sorry about that. Brian Kuzmar with Commercial Rare Coins and Precious Metals. I would also like to thank some of the commenters. I've got like a solid group of commenters out there, a couple guys. Hey, I'm being honest, a couple guys. But thank you for your support. I really appreciate that. And it means a lot to me. It really does. It keeps these reports going. And I noticed we've been growing a little bit as well. So let's see where the new year takes us. Again, thanks for watching. This is Brian Kuzmar, Commercial Rare Coins and Precious Metals. Call me anytime at 954-493-8811 between the hours of 10 a.m. 4 p.m. Mondays through Fridays. We've been in the same location since 1995, and I've been doing this since 1977. So anything I can do to help you become a better, more educated buyer, that helps me and helps you. Please feel free to come by, check out my other videos here, and most of all, hit that like button up in the corner and the subscribe button. Kind of helps me know who's watching and how often. And hey, listen, thanks for watching, and have a great day. And if anything really crazy happens, I'll do a second report. If not, talk to you tomorrow. Good day.